Welcome to the Keiser Report. I'm Max Keiser. It was UK budget week and bingo! Big news for bingo players. The Chancellor halved the tax on bingo profits to 10%. In bingo lingo, this would be jump and jive, droopy drawers, two little ducks, quack, quack. Here comes the Herbie. Beep, beep. Stacy?
Beep, beep. Yes, and the poster that accompanied this, because the Conservatives are very proud of their halving of the bingo profits and actually a 1p reduction on a pint of beer. So the poster reads, bingo, cutting the bingo tax and beer duty to help hardworking people do more of the things they enjoy. The Chancellor said the cut was prompted by the fact that the number of bingo halls had plummeted by 3/4 over the last 30 years. Maybe it has something to do with like modern media, the internet, games, things to do that are better than playing bingo.
Yeah, it's curious that he would be so fascinated with bingo, that the number of bingo halls is diminishing, so he's going to cut the profits on the bingo profits to resuscitate the bingo business. This would seem like a misplaced use of taxpayer money somehow?
Well, actually, the biggest bingo operator said they're going to open 3 new bingo halls.
Well, this is just failing to resuscitate what is an economy moribund with excessive debt due to speculation and misplaced bets along the way. So therefore, bingo itself would seem to be the last place one would want to put that money.
Makes me think that they haven't encountered a working class person since maybe the 1950s. But it's also important in bingo lingo to, when you shout out the numbers, to get the numbers right, because you don't want to call out the wrong number and then the wrong person thinks they won. So I wanted to look at the importance of numbers. Over in the United States this week, there was also another important announcement. Here in the UK, you had the budget 2014. In the United States, you had Janet Yellen's first ever press conference. Stocks tumble after Yellen says 6 months. During the Q&A of a press conference Wednesday afternoon, Janet Yellen said the Fed could start raising interest rates as soon as 6 months after it was done winding down its stimulative quantitative easing program. This was a much narrower time frame than expected.
Yeah, I'm still thinking about this bingo thing. You know, I think I got it now. The Tories, the Toffs, and in power, basically, their perception of the working class here in Britain are people buying beers and playing bingo. That's their perception of the working class. So to appease these folks, they're getting them a pee-off on the beer and give them some, on an industry that's in decline, bingo. But this is their perception. This is what oh, lovey, oh, darling, the working class must get a little bingo boost. They have no actual connection to what people might be doing on the working side of the equation that would support the economy that they are so egregiously ripping off day to day on these hard-earned folks. But moving forward to Janet Yellen, yes, she has indicated that the potential for raising interest rates would be, 6 months after they end quantitative easing. So she's putting a date on when the free money, the bingo profits, are being cut to the speculators on Wall Street in the City of London. And of course, stocks moved down on that news. But this is the pas de deux that we see going on between reality and fantasy, is that every time they talk about raising interest rates, of course, markets will drop and then they will keep rates low. So for the foreseeable future, as long as it's possible to crash markets, then rates will be cheap to make it easier to crash markets.
Yes, I mean, regarding the bingo, even the Bingo Association said it's going to have no money in the pocket effect for the actual bingo players. So there won't actually be what's like, it's a 40 million pound industry. Who knows? It's like pocket change, right? It's not a very huge industry.
No.
Here in terms of the American bingo, actually their taxes are about the same as what the bingo was, as 20% in capital gains. But she should have used this term instead of 6 months. She should have said chopsticks, which is the bingo lingo when somebody said. That would have been more amusing, but also it would have confused, because remember, everybody likes Fedspeak, which is very similar to bingo lingo. It's like Alan Greenspan is the one that mastered this, where he would just speak total nonsense, and the markets would be very happy with that. They would say calm.
Yeah, I think that Janet Yellen should be running a bingo shop in Britain, somewhere, maybe in Blackpool. There would be Janet Yellen with like a turban on, talking about in this bingo lingo kind of way, indicating to the people on the bankers and the speculators and the fraudsters out there in the audience trying to line up their collateralized debt obligation with free money from the Fed, with graft from Goldman Sachs, with market manipulation, JP Morgan, bingo, bingo,
So basically, they got rid of forward guidance. They did it here as well. And, forward quantitative guidance. They've now adopted a new term of qualitative guidance. So the headline reads, stocks take dive after Fed moves. So investors were trying to come to grips with this new phrase of qualitative guidance, what it means, and the Fed did away with its prior guidance, which was quantitative threshold based on the nation's jobless rate. The Fed had been using a 6.5% unemployment rate as its threshold to start the process, or at least kick off the debate about raising rates. However, with the jobless rate at 6.7% and the rate itself viewed as a flawed measure of the actual health of the job market, the Fed opted to phase out the numerical threshold. So it's called qualitative guidance.
Well, the markets are addicted to cheap money. And, the Fed, under tail end of Greenspan, enter Bernanke, they would lower interest rates in response to various crises. And they have not yet moved to raise those rates to restore balance to these markets, to restore the risk and reward balance. Because right now, if you are on the right side of the apartheid wall, the interest rate apartheid wall, you can make unlimited amounts of money with no risk. If you're on the other side of the interest rate apartheid wall, then you absorb all the risk, and your ability to make any kind of substantial money is curtailed, and you are living in the interest rate engineered ghetto. So the language from Janet Yellen is a language of the obfuscator. Yes, the Federal Reserve Chairman always uses very obfuscating language to hide. They don't want to telegraph to the market what they're doing because they don't want to give traders an unfair advantage. However, under forward guidance, they did telegraph to the market saying, yeah, we're going to make money as cheap as possible so you can speculate all day and take all the money out of the economy you want. We don't care because we don't need the workers. We just print the money. We don't need the taxes. So now they're changing the language somewhat, but at the end of the day, what it means is that Janet Yellen will retire as a bingo mistress, probably a dominatrix, somewhere at a Soho bingo parlor, and that's the way she'll end her days.
But it also shows as well that why you adopt this bingo lingo. Instead of saying 6, you say chopping sticks, because 6 is a real number, and people can grab onto it and prove you're wrong. Or you say tickety boo or clickety click, and these are like more comforting to the markets. Now, how they're adopting this qualitative number, for example. So they're no longer looking at the actual real unemployment number, because of course those are fake anyway. Those might as well be bingo lingo. So they said a wide range of information will now be included, such as measures of labor market conditions, indicators of inflation pressures, and inflation expectations and readings on financial developments, i.e. clickety click, tickety boo. It makes no sense.
Well, it's like George Osborne's budget speech. They don't mention the fact that the debt is going to be higher this year than ever before, and it'll continue to go higher. Inclusive of all bank debt, the UK has never been more indebted. So, yeah, they can play around with semantics. They can point to different areas of the economy. They can give people a bingo tax break. But the fact is that the indebtedness of the country is ever increasing because they're doing nothing to get rid of the worst actors that are the zombie banks that are sucking all this money from the Bank of England and from these other countries and from these other institutions. And the austerity that's being imposed is only there to inflict cruelty. There's no economic basis for it.
In fact, if you want to look at this next headline and chart that comes with it, this is, I think, why ultimately they will never be able to raise rates again. The most important economic chart, and this is productivity per output per hour, that's the blue line, and the red line is median family real income. The chart shows that productivity or output per hour of work has quadrupled since 1947 in the United States. The gains in productivity were quite widely shared from 1947 to 1980, when, as you could see from the chart, the red line there, the income from the median family declined, while productivity rose. Of course, Max, in 1980, what you think of is at the peak of gold, and Paul Volcker basically coming in with interest rates and basically convincing the world to go off a gold standard, and that the dollar is king and it's good as gold. And however, from that point, you see that the average worker's income declined.
Right, so productivity gains were shared in that purchasing power was maintained so that you would work more and you could buy more stuff with a dollar that was tied to something tangible. Now, starting in 1980, 1971 actually, and then moving forward into the 80s when the purchasing power started to collapse, but the equation of hours worked for pay didn't change, then you could say, well, productivity is robust or not robust, but the fact is you could not afford to buy the same amount of stuff as you could at the end of the week or the end of the month as you could before. Meanwhile, the asset prices that are owned by those who are engineering this divorce from gold into fiat, the assets they own, like the fine art and chateaus in France and London real estate, continue to go up in value exponentially. So once again, you create this apartheid, economic apartheid, using productivity in a salacious manner that makes no sense with an underlying economic understanding of how the business climate works. You misquote GDP, you cook CPI, and you present, as Osborne does, or as somebody in the United States does, a completely false picture of the economy to benefit the few at the expense of the rest. It's been going on for 20 years. It's getting worse, though.
But it's also that dichotomy, the difference between, say, Bingo, Lingo, and Fedspeak. So bankers and the financial sort of experts know the real number. They know, like, stop farting is 83.
What?
Bingo, Lingo.
Stop farting is 83. That's Bingo Lingo?
You're supposed to call back. Who, me?
Who? What? Geez, I got to get down to the bingo parlor because I'm missing out on some very interesting things.
But, you know, the productivity number was going up while, you know, the average worker is being distracted by the Fedspeak, the Bingo Lingo, and they don't realize that their income was going down because they're distracted by different numbers that the likes of Janet Yellen are saying, like, we're going to use qualitative instead of quantitative.
This productivity number increase is there are people working more hours for the same, essentially. So they're saying, well, productivity is going up. You know, the most productive work environment of all is prison. People are essentially working there all day for 20 cents a day. The most productive citizens in the UK and America are the prison population. Oh, and by the way, who has the biggest prison population in the world? The US. Who's building private prisons now at a furious pace, or will about to? The UK, because the prison business is a profitable business. Everyone in the prison is the most productive members of society, but they work all day for 20 cents. Look at the productivity we're getting out of these prisoners. We're fantastic financial engineers.
Bingo!
Who, me? All right, Stacy, we got to go. Thanks.
I'm going to Butlins.
Excellent. All right, stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Egon von Greyerz, Managing Director of Matterhorn Asset Management in Zurich. Egon, welcome to the Keiser Report.
Thank you. Great to be here.
All right, Egon, we've just had some pronouncements from Janet Yellen and the Fed. There's always an interesting connection between what she says and the price of gold, which of course is your specialty. Maybe just open this up a little bit by talking a little bit on this.
Yes, well, you know, Janet Yellen is not going to change anything from what Bernanke did. I mean, they are the biggest money creators in the world, the Fed, and they will continue to do so. Okay, short term, so she had to continue with tapering, but that won't last. And actually, you know, the influence of the Fed announcement on gold, the last 6 times I've gone back and seen gold goes down every time, and often quite substantially around the Fed announcement. And then in the last few months, it's gone up, back up every time again. So it's a good trade going short before the Fed announcement and then buying back again.
Okay, you just said something there. You said tapering won't last. Now, just to remind people what tapering is, I mean, the quantitative easing was this idea of the Fed buying back all these bonds, effectively monetizing the debt. Now this has gone on for a while. People are asking, when are they going to get out of this quantitative easing? And the word used is taper, they're buying less on a monthly basis. But they're saying that they're possibly going to stop quantitative easing. And she said within 6 months after that, interest rates would go higher. You're saying no tapering, absolutely not. Talk a little bit about this.
Well, the Fed lives in a dream world. You know, they believe that, like the president, that the U.S. economy is booming and that things are going to get only better. It won't happen. The U.S. economy is bankrupt. It will continue to be bankrupt. They need to issue unlimited amounts of money to survive. And of course, printed money will never create wealth, so they won't survive with that either, but they will just kick the can down the road. So the Fed will continue to print money. That might be tapering for another couple of months, but thereafter there will be events that will necessitate the Fed printing money at an accelerated rate, in my view.
How would you compare, let's say, what's going on in the Fed in the United States and the Bank of England here in the UK? Obviously, they have a new chairman, Mark Carney. They've come out with their recent budget discussions. It appears that with programs like the Help to Buy scheme, which is a way to underwrite the real estate market, like the Fannie Mae in America, it's very similar to the U.S.
Very similar. You know, there are two areas of the UK economy that are booming. One is behind us here, the city. Everyone is rich in the city because if you have money, you can make money because every central bank in the world helps you to print money and therefore to trade with money and to make very nice returns on the money. The other market, which is prospering, is the housing market. You cannot have an economy based on finance and on people buying houses, especially now with no money down and subsidized interest rates. So the UK consumer is borrowing, the US housing market is booming. That won't last either.
Okay, Egon, basically, correct me if I'm wrong, but over there at Matterhorn Asset Management in Switzerland, the firm that you run, that you're the chairman of, the goal is wealth preservation, and the medium for this is gold. So gold not necessarily for trade, gold not as an investment, but gold as wealth preservation. What does that mean? Talk a little bit about that.
Yeah, well, we decided already 12 years ago in 2002 that the world was going to be in a mess and that it was absolutely essential to preserve wealth. So we told our clients that we even set up to 50% of their financial assets into the physical gold market.
Okay, so that's a very, let's say, aggressive recommendation because typically people would say put 5% into gold. But your firm, back when gold was at $250, $300 an ounce, you said up to 50% in gold.
Yeah. So obviously everybody didn't put 50% in. We have clients who have 100% in gold almost, and we have clients who have 5 or 10. So, but nevertheless, we saw that the destruction of paper money was going to accelerate. So it was, for us, you buy something when it's unloved and undervalued. And at that time, gold was both unloved and undervalued. So it was pretty easy. Now, governments will, as they have done throughout history, continue to destroy the value of paper money by printing unlimited amounts of it. And so they have been doing, they're still doing it. You know, Bernanke, during his period as chairman of the Fed, the debt of the United States of America went from 8 trillion to 17 trillion. So he created more debt in his 7 years than it took the US to create for over 200 years. They went from 0 to 8 trillion over 200 years, and he created 8 trillion in just over 7 years. Yeah, that will continue. Yellen will continue also. They can't do anything else.
All right,
they're running budget deficits. They've run budget deficits for over 50 years. They're running trade deficits for the same period.
Right, and it seems like everything is tied to this idea of interest rates being near zero in perpetuity, which is kind of a crazy bet. But before I talk about interest rates, I wanted to throw something out at you and see what your response is. Basically, people talk about the price of gold.
Yeah.
And they fixate on, oh, it's 1900, it's 1500, it's 1300, and they really focus on price. I want to introduce this concept, price versus availability. The idea here is that when the time comes when you really need your gold because of the banking system collapse from all this shenanigans, there might not be gold available for you at any price. If you know what I'm getting at. In other words, there's issues in Switzerland and around the world where people are going to collect their gold from the bank. And your service, by the way, is not a bank, it's a vault, big difference. And it's not there. So here's my topic, price versus availability. Take it away.
Yeah. Well, you know that the paper market in gold is about 100 times the physical market. We live in a paper world today. Everybody believes in paper. But sadly, the paper gold holders will not get any gold. And when the problem starts in the economy, and they will do, and people start worrying about the fact that the bullion banks have no gold, the central banks don't have anywhere near the gold they say they have, and people start then saying, I want delivery, they won't get gold. They'll get money, maybe, if they're lucky. And COMEX will not be able to deliver either, the futures market
Okay,
we're talking about.
bullion banks, HSBC, JP Morgan.
Correct.
And others. You're saying they don't have the gold they say they have.
Exactly. They don't have the gold, and the central banks certainly don't have the gold. They said they're supposed to have 30,000 tons. I don't think they have half, even less. I mean, everybody in the gold market knows that the Fed has not had an audit since Eisenhower's days of their gold.
And it's in Asia.
It's in Asia because what happened, especially when gold fell last year, which is, I'm sure you've been through this before, when gold fell last year, this was manipulated fall of the gold price so that the bullion banks could fill up their vaults. What happened instead is that, because normally everything, the bullion banks, when they buy and sell, the gold stays with them. The buyer and the seller is always with them. Central banks, you know, the ETFs, etc. As it happened now, the Chinese bought all the gold that actually became available.
And Russia.
And Russia also.
Let me ask you this quick on the geopolitical front. It seems like on the geopolitical equation, you've got now Russia, China are kind of siding up against, and we'll call them the oil and gold and gas powers versus the paper powers of the U.S., the U.K., on that other side. So it's gold versus paper in this currency war, as you could call it. Over the last few years, during the price fall, China and Russia have been aggressively buying gold. Are they now in a position where they can reject the U.S. dollar as global reserve currency and strike out on their own? And is that part of what we're seeing in these global tensions?
Absolutely, in my view. I mean, the dollar does not deserve to be the reserve currency of the world, sadly. You know, coming from Switzerland, when I started working in Switzerland a long time ago, 1970 roughly, the Swiss franc to the dollar, it was $1 for Swiss francs 30. Today it's about 88 cents. That's a fall of 80%. And only in the last 12 years, the dollar has gone down 50% against the Swiss franc. The dollar is on the road to perdition, sadly. Sadly, but it's, you know, you cannot run all these deficits that I just mentioned and consistently overspend and spend what you don't have and print money and at the same time be the reserve currency of the world. So yes, the dollar is on its way now. I mean, they're trying to support it at various points, but the dollar is on its way now to crash. All currencies, of course, are going down to their intrinsic value, zero, but the dollar will be the first one. So I believe it's only a matter of time before, as you say, China, Russia, etc. First, I mean, the wonderful weapon that Russia has now is just to stop using dollars altogether in the Ukraine and Crimea battle here. And of course, that will hurt the US more than anything else. So, you know, never mind all the sanctions they're trying to...
We've heard about currency wars.
Yeah.
So you're saying that in the currency war, or let's call it a big poker game, Russia, China are holding 3 aces in their gold, and then the U.S. has got a pair of 2s.
Absolutely. And especially because they have a very weak currency that, you know, that is overvalued because the whole world is trading in it. But once they stop trading in it, and I think China and Russia will be the first countries to stop trading in it.
Well, they're doing a lot of bilateral deals now.
Yeah, already.
Brazil, other BRIC nations, a lot of bilateral deals. I want to talk about this idea of manipulation for a second because it's a contentious topic. But one area that we know, without a doubt, we see the manipulation happening, and that is when, we see it almost every single day, the price of gold in Asia is up overnight because people in Asia are buying gold. You know, they realize this paper money empire is about to collapse. And then when the price hits New York, hits COMEX, you see a big dump almost every single day. To me, that's a clear sign of manipulation. It's not price discovery, it's price manipulation. Your thoughts?
No, there's constant price manipulation, and especially you can see it happening because it's always in the thin market, and you know the trades are always crazy. No one would dump the amount of gold, or in this case, paper gold, of course, is never physical, that they dump when they manipulate because they're just, you know, you'd lose a fortune every time you do it. So the manipulation, there are many people, you know, Chris Powell of Gata and others who are, you know, more experts in this than I am, but it's absolutely clear there's manipulation. manipulation. Because why do they do it? Well, because first of all, because they haven't got the goal that they have, so they actually need to get the price down. And secondly, gold reveals the bad management of the economy, and that's why they want gold down. So, but I have a very firm view that manipulation only lasts short term. In the long run, the real market will win, and in this case, gold will win. They cannot, they haven't, in the last 14 years, we've gone from 250 to 1,330 today. That trend will continue because all it does is to reflect the destruction of paper money.
All right, fair enough. Egon von Greyerz, thanks so much for being on the Keiser Report.
Okay, it's a pleasure to be here, Max. Thanks very much.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Egon von Greyerz of Matterhorn Asset Management. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.